Please come to the next paragraph. Procedure for allotment of right share. So there are 8 steps we will understand. First is call a board meeting. By issue notice of meeting and approve right issue, including letter of offer, which shall include right of renunciation also. Letter of offer is issued in case of right issue. Prospectus is issued in case of public issue. Right of applying the share will also include right of renunciation also. First, you call a board meeting. Second, send offer letter to all the existing shareholders as on the date of offer through registered post or speed post or through electronic mode, means basically email. So those members who have provided the email account, you can send through email, and those who have not provided email account, you can provide through registered post to all the existing shareholders. How many days before the opening of the issue? At least 3 days before the opening of the issue. Then receive the acceptance. Some shareholders may decide to subscribe. Some shareholders may renunciate in favor of others. Some may reject, receive acceptance, renunciation, rejection of rights from the members to whom the offer has been sent, and also from the persons in whose favor the right has been renounced. In the previous lecture we have seen, you can either accept the right, you can renunciate in favor of any other person also, or you may even reject it. So in the step number 3, the company will receive this acceptance, renunciation, rejection from the member or from the person in whose favor the right was renounced. Okay. Call a board meeting by issue of notice. Now what is your task? Approve the allotment by passing a board resolution. Fourth step is allotment. Fifth is authorize 2 directors and 1 more person for signature on share certificate. In case if share certificate has to be issued, 2 directors and 1 more authorized person would sign the share certificate. But if it is in demat form, no signature. Attach list of allottees. List of allottees means those to whom shares are allotted in the form PAS3. There is a form number. You have to remember all these details, mentioning name, address, occupation if any, and number of securities allotted to each of the allottees, and the list shall be certified by the signatory of the form PS3. So you have to submit this document. File E form MGT14. Wow. From where do they get such name? Management. MGT means management. Oh, I never knew that. E form MGT14. Then what is pass mean? Pass 3. Okay, whatever, allotment of share or something. Okay. Form E form MGT14 for issue of allotment of shares and issue of share certificate. And pass 3, allotment of return of allotment to ROC for allotment. Then issue share certificate. Make allotment within 60 days of receiving of application money, otherwise it will be treated as deposit as per deposit rules. So these are the procedure for issue of right shares. Since it's an open book exam, just keep the steps in mind. They may ask you that following are the steps in issue of right share. If they give the same sequence, you will say yes, true. Otherwise, you may be asked to also arrange the given steps in the proper order also. So then you can follow this. You don't have to take efforts to remember these form numbers. You can always refer. Now the last part of this wonderful chapter, capital market primary, is exit offer. Exit offer means called delisting offer, and it is also called delisting offer. So in this section we have to just discuss what is delisting. Opposite of listing is delisting. What is listing? A company shares are listed on the stock exchange. What is delisting? Company shares are removed from listing on the stock exchange. So a listed company will become unlisted. Listed company will become unlisted. In a listing process, unlisted company becomes a listed company. That is, the trading takes place in the stock market. In delisting, the trading will stop in the stock market. Okay, so that is delisting, and that is why it is called exit offers. The different legal provisions are as follows. In reference to the capital market, exit offers refers to delisting. Why the companies go for delisting, we will discuss. Okay. First, understand the meaning of the word listing, and then you will understand the meaning of delisting. Listing means admission of company securities to the trading platform of the stock exchange. That is what you have been learning since last 3 days. So as to provide marketability and liquidity to the security holders. So listing means an unlisted company gets listed on stock exchange for trading purpose. Shares can be traded, shares become liquid, shares become marketable, more and more investor can purchase and sell that share. Delisting is totally the reverse of listing. Okay. It means the shares will not be traded in the stock market anymore. It will not be liquid or marketable. It will become difficult for the investors to trade in those shares. So to delist means permanent removal of security of a listed company from the stock exchange. As a consequence of delisting, what will happen? The securities that would of that company would no longer be traded on that stock exchange. Good or bad? Some companies, they first are very enthusiastic about listing, okay, but once they get listed, they realize it's too much of a compliance. Compliance is very much in case of listed company. Scrutiny is too much, public scrutiny, media scrutiny, okay, and you are not able to concentrate on your business. More and more time and efforts goes in compliances also. So therefore, some companies may want to go for delisting also. Sometimes they are not able to fulfill the rules and regulations for listing purpose. So after getting warning from stock exchange, they might be delisted by the stock exchange. Like for example, 25% of the shares must be with the public. If you want to become a listed company, at least 25% share should be with the public. So if you are not able to comply with that requirement, then the company might be delisted. And then many other disclosures requirements are there, submission of forms are there. So if you are not able to comply with those requirements, company can be even compulsorily delisted by the stock exchange. Delisting of company signifies a listing company moving out of listing status on the stock exchange. Categories of delisting. One is voluntary and second is mandatory. Voluntary means the promoters may decide to delist their shares voluntarily. There is no regulatory compulsion under any statutory provision to initiate delisting. So delisting, voluntary delisting is again, as the name suggests, pure voluntary. There is no provision. But mandatory delisting is when some regulatory compliances are not met, when some regulatory compliances are not met, then mandatory delisting gets triggered due to some regulatory compulsion under statutory provisions. Once again, SEBI guideline. You have many SEBI guideline in this chapter. Half of this chapter is SEBI guideline we have covered actually relating to ICDR. So this is again one SEBI guideline, delisting of equity share regulation 2009. The idea is to protect the interest of the different stakeholders, mainly the shareholders. Delisting regulations are governed by SEBI delisting of equity share regulation 2009. These regulations provide three different sets of provisions. You will see point number 1, 2, 3 below. Three different sets of regulation for delisting of equity share under the different circumstances. First is voluntary delisting. So what is SEBI guideline on voluntary delisting? So you read this paragraph. What is the SEBI guideline on voluntary delisting? It means delisting of equity share of a company voluntary on application of the company under these regulations. So management or the promoter will have to make an application for delisting. The main delisting provision pertains to the voluntary delisting sought by the promoters of a company from the only recognized stock exchange, giving exit opportunities to all the public shareholders. Actually, they have not mentioned in detail the provisions here. But before you go for voluntary delisting, you have to comply with the provisions of voluntary delisting under these rules. Rules are not mentioned here. Okay. For that, you have to refer the SEBI delisting of equity share regulation 2009. The idea is to protect the interest of the public shareholders, non-promoter groups. So then the SEBI will give them a guidance how to satisfy or how to settle these non-promoter group shareholders, because then they will be in a fix. Yes or no? I invested in a company share. It was listed. I was assuming that the company will be available for trading anytime I can sell. And then suddenly the company goes for delisting. So don't you think my interest is compromised? So then there is an exit offer that is given to such shareholders. And then their stake would be normally purchased by the promoters. Because otherwise they will not be able to sell their shares. Their money will get blocked permanently. So in order to ensure that the promoters do not, you can say, keep the general shareholders in a fixed situation, difficult situation, the SEBI must have some provisions that you have to first purchase their stake, give them an exit route, then get yourself delisted. Otherwise it will be cheating to the shareholders. Take the money, list it, delist, and now he cannot run away. What is compulsory delisting? Compulsory delisting means delisting of equity share of a company by a recognized stock exchange on any ground prescribed in the rules made under Section 21A of Security Contract Regulation Act 1956, which is not printed in your study material. What is this Section 21A? Is it there in your law syllabus, SCRA, or you don't know? Security Contract Regulation Act is there in your corporate law syllabus. Many students in the class sitting here, they don't know whether this subject is there or not. Subject is there. Topic is there or not. That we don't know. Okay. Today your homework is, you will go through section 21A and tell me what are the conditions prescribed for delisting of a stock of a company from the stock exchange. So basically what I can visualize that they have not complied with some regulations. Okay, like minimum public shareholding, submission of certain forms, documents, etc. And then what will happen? The stock exchange will ask them to get themselves delisted. And then special provision for delisting of small companies. Point number 3. Special provision for delisting of small companies who are small companies whose shares are not frequently traded or with small number of shareholders. Is it right? So there is a separate provision for such small companies. But again, right now in your even study material, they have not mentioned the provisions here for delisting of small companies. So first is voluntary delisting. Second is mandatory or compulsory delisting under the provisions of 21A of Security Contract Regulation. And third is there is special provision for delisting of small companies where you have very less trading and small number of shareholders. These regulations are applicable to delisting of equity shares of a company from all or any of the recognized stock exchange where such shares are listed. So delisting provisions can be applicable to only one stock exchange or all the stock exchanges where the shares are listed. You may get delisted from only one stock exchange, but you can continue in the other stock exchange also. However, this does not apply to delisting made pursuant to a scheme. Means these regulations are not applicable to. So some relaxation is given. Delisting made pursuant to a scheme sanctioned by the board. Which board? Board for Industrial and Financial Reconstruction. Delisting made pursuant to a scheme approved by Board for Industrial and Financial Reconstruction, which was earlier popularly called it BIFR, usually for SIC companies under SICA. What is SICA? SICA means SIC Industrial Companies Act. Does this act exist anymore? No. This was the old act. Okay, but the SICA is no longer there. Or by the NCLT. What is NCLT? Company Law Tribunal. So if these bodies, either BIFR or NCLT, if the delisting is pursuant to the scheme approved by these entities, these bodies, then these regulations are not applicable. If such scheme specify procedure to complete the delisting or provides an exit option to the existing public shareholders at a specified rate. Delisting provisions are not applicable to the delisting made pursuant to a scheme approved by Board for Industrial and Financial Reconstruction under SICA or under NCLT. If such schemes specify the procedure to be completed for delisting, they provide an exit option to the public shareholders at a specified rate. So those who want to exit can take the price and tata bye bye. A company cannot apply for delisting of its equity shares pursuant to buyback of its equity shares or preferential allotment made by the company. So this is one provision in SEBI delisting regulation that pursuant to buyback of equity share you cannot apply for delisting, or pursuant to preferential allotment made by the company you cannot apply for delisting. Company cannot go for delisting unless a period of 3 years has elapsed. Now again, this is a good paragraph. If you have got yourself listed, then for how many years you can't apply for delisting? For 3 years. At least 3 year wait. Company cannot go for delisting unless a period of 3 years has elapsed since the listing of that class of equity share on any recognized stock exchange, or if any instrument issued by the company which are convertible into same class of equity share that are sought to be delisted are outstanding. Suppose you have listed equity share on a stock exchange and you have issued a convertible debenture which will be converted into equity share. So till this convertible debentures are outstanding, delisting cannot be done. Delisting cannot be done. Okay. No delisting of convertible securities may be done. If you have issued convertible securities and which are listed on the secondary market, then delisting cannot be done, because many people invest in the convertible security with this hope only. What is the hope? That one day they will be converted into shares and then I will sell my share in the market at a higher price. The logic of investing in convertible debenture is this, that one day I'll make a huge amount of profit, but you will make profit only if it is marketable and there is a stock exchange where you can sell. So therefore delisting of convertible securities are not allowed. This chapter is over.